No huge changes in the order book, so we're going to start things out on the candle chart today and dive into some of the fundamentals that might be impacting Bitcoin price. Good morning, guys. It's Keith Allen, and as you can see, we're starting things out today with a nice, strong green trend precognition signal. Actually, we have confluence between both the A2 plus algo, that's the one here with the arrows, and the A1 algo with the dots here, and this ever important live A1 slope line showing us upward momentum on the Bitcoin daily chart here. We're starting to consolidate in this range. It looks like in this 59 to 69K range. Yes, that's quite a large range. It's $10,000 range here, and obviously Bitcoin needs to find its footing. Right, we have failed to validate an RS flip here above the 69K level, and now we're looking for validating support, looking to validate support here. We have this lower low. This to me is the most important area on the chart. If we lose this level, we then look to other consolidation levels for support. Right now, Bitcoin is putting up a good fight, and we do have some liquidity stacked here in this 59 to 62K range, which obviously is helpful. We have kind of a last line of defense here at the red 50-day moving average here. That's in the mid 63 range. I think there's a CME gap around that range too. So, it's reasonable to think that we might get a retest there. Bitcoin has respected that level since early February. So a retest there would be reasonable and welcomed, in my opinion. Even a retest down here at this level would be welcomed, in my opinion. Whether we get it or not remains to be seen. The market doesn't give a shit what I want or what I think. It's going to do its own thing, and we're just going to trade what it gives us, right? So, we've talked about these potential other landing zones, and that's certainly something that we'll watch if price happens to break through this range here, right? Bitcoin likes all assets, for that matter, like consolidation. They like areas of consolidation to, provide some structure in the chart and a foundation for stronger moves up, right? We saw it here. We saw it here. This one never got retested, not once. And that, to me, is a bit suspect. It's a reason to consider the chance to move down here, or more of a reason to consider a chance to move down here. Of course, none of that happens if this level holds. And if it does, we would have a strong foundation, especially the longer we consolidate here as we approach the halving. This doesn't mean, just because we have the halving here doesn't mean that we automatically straight line up. It doesn't mean that at all. We've got a history of large corrections around halvings and in bull markets, so we can't ever discount the fact that could happen again. Let me clear out these trend precognition signals, and just to illustrate again for you guys, lots of history of corrections happening just ahead of and right after halvings. So don't think that can't happen. It can, it will, it has, and it will again. So, the good news is, after halvings, ultimately, in the long game, price tends to move up. So we have every expectation that will happen. Doesn't have to. We have a new regime, right? But it's reasonable to expect price would move up at this point after the halving. There will be dips. There are no straight lines. So, where do we go from here? If we can break up, after some consolidation, and there hasn't really been a lot here, right? This is the weekly, and we're, you can see that the upside of 69K has been difficult to hold. And so some consolidation in this range would be good. Then we could work on this range and above that new all-time high, which is now around 73.8, before we can talk about climbing up here into the upper stratosphere, where, in my opinion, this is where real price discovery happens. This would just be epic, right? And nothing says that we have to even climb back in there, right? We could continue on this upward trajectory and still be doing fine, right? This still gets you to 150K BTC by next year. So if price could hug this trend line. So a lot of speculation of what's going to happen. I can just, all I know to do is trade it range by range and, one step at a time. Once we clear a level, we can talk about what's going to come after that. In terms of, other things influencing price action, of course, we have, yesterday there was some news. We talked about the ARK, Kathy Wood's ARK Invest, leading the outflows for the first time ever. Eric Balcones from Bloomberg put some great perspective on that. And I've seen some other reports that speculate that, hey, maybe it was just some quarterly rebalancing. That's plausible. That's certainly a plausible theory. As we can see yesterday, inflows, came back into the upside. And look at this. Grayscale's outflows dropping significantly here the past couple of days. There have been some periods where they had lower outflows, but maybe the bleeding is starting to slow down for them. Again, I think this was very calculated by Grayscale. They jacked up their fees to 1.5%. They've made hundreds of millions of dollars. Yes, they've lost billions in outflows, but they've made hundreds of millions of dollars off of this in revenue from these fees. And, their situation is different than everybody else's. They had billions and billions in assets that were converted from the Grayscale Bitcoin Trust from years ago. They were frozen after the FTX crash. And those folks, a lot of them were in this for a very long time. That Grayscale Bitcoin Trust started in like 2013. So a lot of these people made a lot of money. So I certainly don't blame anybody for cashing out. People get pissed at Grayscale. It wasn't Grayscale. It's their investors wanting to take their money and run. Sure, many of them were incentivized by this fee. They wanted to get out from under these big fees and potentially move into something else like BlackRock or any of the other of the 10. But nonetheless, this is what you do. You take profits, okay? And these people had their coins locked up for ages and finally had a chance to cash out, and they did. So I don't find any fault with any of that. And in terms of Grayscale's business model, they've got some heavy legal fees to pay and some lawsuits to settle, so they're generating capital any way they can, and this seems to be working for them. Back to the other 9, the new 9, if you will. That's a tag that Eric Balcones has given us, and I like it, so I'm going to stick with that. BlackRock hasn't had any outflows yet. But I think what we're seeing here is that the asset class is maturing, right? In the beginning, it was just like all on. These guys have waited for a decade to get an ETF, and once they got greenlit, it was game on. There was lots of hype, lots of euphoria, and they just poured in billions faster than literally any ETF in history has grown. This class of Bitcoin ETFs has really flourished fast. So it makes sense for them to let off the gas a little bit. And I think it also makes sense to understand that these institutional traders who weren't accustomed to the volatility of Bitcoin now seem to be getting a sense of how Bitcoin trades, in the early days of this, right? We had an initial pullback because of all of this dumping from Grayscale. And then the inflows really started hot and heavy once that these institutions had a chance to reach out to their customers and start marketing this product that they're selling, right? And so they poured in, and that ETF demand that was 10, 12x daily supply really pushed price. ETF demand pushed price, no doubt about it. It did it for the first 2 months. And now just maybe these guys are maturing and realize how Bitcoin trades and go, hey, there's an opportunity to buy lower. Let's let that happen. And so I think this asset class is maturing, and, time will tell. There will be future waves of ETF interest. There will be future waves of institutional investors, large institutions coming into the ETF game. So that demand will still be there, but maybe not as euphoric as we've seen in the early days. So another thing that I've been watching here is the Silk Road outflows, right? So U.S. government seized billions from Silk Road, and now they seem to be selling some of that coin. How much? I'm not exactly sure, but I don't think that this is just going to be a big flash dump on the market. It doesn't appear to be. In fact, as you can see, they're down about $1 billion so far in terms of what they've sold here in the past few days, and so we'll be watching this, but but they're not just dumping on the market. They're trickling it in. It's in their best interest to get the best price that they possibly can, as is and as it has been with previous selling or distribution of U.S. government seized Bitcoin, and as it was with and continues to be with the FTX liquidations. We've seen those assets do surprisingly well during these distribution periods, and the reason is, I think, anyways, I'm speculating the reason is because it's in their best interest to keep price elevated. And so whether they're doing it directly or they're getting some help from third parties or maybe people with 6 degrees of separation, there seems to be some liquidity coming in to hold supply, hold price up, help keep price elevated as they distribute into the range. And we're, of course, now none of this Silk Road money seems to be being distributed on Binance at the time, and Fire Charts does show us Binance, but we have seen obviously some significant bid support come into the order book, and Binance does serve as a great proxy for the market. The volume on Binance is exponentially larger than any other of the big exchanges. In fact, it's more than probably the top 8 or 10 big exchanges combined. So that's noteworthy. We did have a $150 million or so bid ladder come in here, and we had a secondary bid ladder of that size come in here, concentrated to a lower level in this 59 to 62K range. That's thinned out a little bit because price is moving up, maybe less sentiment here. And this, of course, maybe this was just to herd liquidity up, which it seems to be doing. As you can see, and let me click these. This is the bin CVD, right? This shows order classes, bin by size, orange being $100 to $1,000 orders, green being $1,000 to $10,000 and up. Historically, purple has had the most influence over Bitcoin price. And as you can see, over the past day or two, purple has just been on a tear, right? They are buying aggressively these dips. Meanwhile, retail, all these other order classes combined are selling. Whales, purple whales, and brown mega whales have been buying. You think they know something you don't? Probably so. So keep that in mind, right? Now, that doesn't mean that we don't ever get a retest down here, because we talked about the reason that could possibly happen, and quite frankly, probably should happen. So keep that in mind as you're piecing together the narrative of what is influencing price action. Now, yesterday we looked over at the ETH chart, and today I want to do that again because I see something interesting here developing in the chart. And I think this is actually a great way to illustrate some risk management principles here. As you can see, there was a rejection from up here at the 786 on the fib retracement. ETH was going through a fib retracement through the golden pocket. This is the 0.5 fib, the 0.618 up here. That's the golden pocket. And so it broke out of that range and now came back in to retest that range, fell back into the golden pocket, which is where we sit right now, and running into some strong resistance back here at the 618, trying to get back above this level. Now you can see I have this white trend line here, which is just shy of that 618. We're talking like a few bucks, right? Close enough to the pin, right? But I had this was a prior area of Confluence for me that I had highlighted. So I'm looking at really the 618 is has the advantage in terms of technical strength and support and indicators, and we're right at the line right now. I even switched on the price line so you can see it's at 33.45, and we're literally $1 over that at the moment, and that just happened. So if we can, if ETH can continue to break up higher, there's strong resistance here at the 50-day and the 21-day moving average. So if you look at that in terms of risk to reward, and I want to illustrate, this because a lot of people have issues with risk management. So let's just say that price breaks up from here. How high could it go? Well, expect resistance at the 50-day and expect resistance at the 21-day. So you're looking at a max of 4%. I should probably go to let me get a different measurement tool up here, and I can show you what the offset might be here, right? So let's do it this way. If price can make it up to this level, you're looking at, 4%. If you had a very tight stop down here, okay, you have decent risk reward. But if price fails to hold above the 618, chances are it grinds back down to this level. You can see the 100-day moving average has Confluence pretty close to the 0.5 fib, which would be the next line of support. That's 14% to the downside. Even if it's the lower low that's being protected, that's 8% to the downside versus 4% to the upside. That's not a good bet, in my opinion. Risk reward is off. Now, if price can continue to move back up to the 786 and test this level again, that's a 20% move to the upside, and the risk reward starts looking much better, right? So this is, this is great in terms of risk to reward, if price holds here. So be conscious of that. So now if you wanted to be really conservative, yes, that will cost you a bit in terms of upside profitability. But if you waited for price to clear the 21-day moving average, that would take your profit up to or down to 15% from 20%, but it mitigates a lot of risk, and then you would have a solid support level here back at the 0.618. You're risking 4% to the downside to make 15% to the upside. Still, the risk reward much better on that setup, in my opinion, than aping in here. If you ape in here, then you need to have a super tight stop to make this risk reward look attractive, in my opinion. I'm just kind of watching it go. I have an open position on ETH that's currently in the red and happy to let it evolve, see how things happen. If it falls back down to this level, I would add to that position for some longer term holding of ETH. That's how I'm playing the game. Doesn't mean it's the way you should play the game. In fact, nothing I say or share on these streams should ever be considered trading advice of any way, shape, or form. Trading is risky. Do your own research and manage your risk. Save your capital for those opportunities if and when they do present themselves. Hey, it may not happen now. It may not happen before the halving. It might not happen until, it could happen right after the halving. It might not happen until we're from here. But these bigger corrections happen. So whether it happens, whether it happens from this level or whether it happens from this level remains to be seen, okay? But just know that corrections will happen. They happen with regularity, and it's always a good idea to make sure you have some dry powder available for those opportunities, right? These bloodbaths are opportunities. And as long as you manage your risk properly, you'll be in good shape, right? If you let yourself get wrecked and over leverage yourself, that's when you're going to have problems. That's a simple fact here. So I'll give you one last look at fire charts before we wrap this up for the day and drill things down. You can see whales are still buying at this point. We have some thinner zones of liquidity here, which makes it easier for price to move through here. Not a lot of friction between here and 70K. So we could conceivably see price working its way back up to this level, maybe even going back up to test resistance. Right above us, we have about 30 million in resistance. So that's significant. May not sound like a lot to you guys, but it is in terms of levels on the chart. If we can clear this level, then it's an easier path to get back to 69K and see if we can retest that level again as well. To the downside, you can see some of this thinning out here, which could and should be, something that we need to be aware of, right? When this support was here, price started moving up. Now that this is gone, there's always a chance that things come back down into this range. This is the 59 to 62K range that we had talked about on the candle chart, and that is, of course, where the most liquidity is stacked at the moment. So always potential for that to happen. I'll be watching on the shorter time frames to see if we see price, if we see liquidity moving up or moving down. That'll give us some more clues as to what this momentum is going to do. But really, as long as whales are continuing to buy aggressively, I have confidence that things are going to be, moving in the right direction. Think about that, right? You may not have the resources to be a whale, but if you have the data that shows you what whales are doing, you can swim with the pod. Hope that helps you out, guys. I appreciate the support and comments you guys are giving me. Keep them coming. If you like the content, please do me a favor, smash all the buttons, help me grow this channel, and by all means, share those comments. I love the comments, and I engage with each and every one of them. If I'm helping you out, let me know what's working for you. And if you have suggestions, if there's other info you'd like me to share, if there's other charts or coins you'd like me to analyze, share them with me, and we'll take a look. All right. So here we are. We got a couple days to go in the week. We've got actually some economic data coming out here in just a couple minutes. So let's see if that has any impact on things. Jay Powell spoke yesterday, a bit of a nothing burger, but I think he's trying to maybe adjust the thermostat on things. So let's keep an eye on this. Have a great day, guys. As always, trade safe.